In other business news, policy uncertainty as measured by the Northwest University's business school decreased in the second quarter of 2025, but still remains in negative territory. The index fell to 75.9 points, with negative forces outweighing positive domestic developments. Positive domestic variables in the second quarter included slower inflation and lower interest rates, which could be further reduced later this year. The adoption of the 2025-2026 budget by Parliament also increased certainty. Negative factors, however, were the disappointing GDP growth in the first quarter of this year, forcing a scaling down of forecasts for 2025 by National Treasury and the Reserve Bank, as well as higher unemployment. Professor Raymond Parsons from the Northwest University Business School speaks to us about this now. Thank you so much for your time, Professor Parsons. The index paints a double-sided story of sentiment around the South African economy. Let's first discuss how vital the positive elements have been.
Well, good afternoon to you. As you rightly say, in the first quarter of this year, we had two important shocks, of course, externally and globally. There were the Trump tariffs in their first round, which sent shockwaves throughout the world economy, and including South Africa. And then secondly, there was still the uncertainty in the first quarter about a South African budget that was not approved, or at least was not voted upon by Parliament, and that there would be subsequent rounds of the budget before it was finalized. So that explains why in the first quarter there was a record high in our policy uncertainty index, those twin shocks. But of course, in the second quarter, there was some easing. Remember that the PUI is still well in negative territory. The baseline is 50, and it's still at 75.9. So clearly, we are still much in negative territory. There were some positive factors, such as a lower inflation, easier interest rates, the fact that we may be off the grey list, one or two other positive factors that occurred. But the fact remains that the negative factors, namely, as you mentioned, that the high-frequency data of the past few months about the economy have been very divided, sent out mixed signals, very muted, that the GDP growth rate of 0.1% in the first quarter was disappointing. It also cast a long shadow. And then in the wake of that, there were the revised forecasts, both by the Reserve Bank and by the Treasury, by other private economists, which scaled down our forecasts of economic growth for this year. Unemployment rose, of course, in the last few months, so that really at this point, we are looking in the context of policy uncertainty, a growth rate of probably about 1% this year. We all know that's simply not good enough, and we have to do what is necessary in order to unlock our true growth potential.
And as you've mentioned, Professor Parsons, there is risk when it comes to those negative contributors. But looking at the near term, now that we have jumped over the third version of a South African budget, there is still the other issues in terms of the global economy that could filter into the local market in South Africa that could really see us fail to turn the tide where economic growth is concerned.
That's a very important factor. The fact that we eventually reached a finalized budget, which was approved by Parliament, or has been approved by Parliament, that's been a positive step, no doubt about it. And that's on the positive side of the balance sheet. But the important point is that to the extent that there are factors under our control domestically, which can make a difference to our economic outlook, is very important, because the only way we can possibly cope and offset some of the external global shocks that either we are experiencing or may still experience means building your domestic economy, building resilience, reinforcing our economic buffers, which means that we have to get on with the structural reforms that we are committed to, accelerate them, to ensure also that the infrastructural spending to which we are committed is visibly translated into projects with the cooperation of the private sector, and a number of other issues which keep the the level of policy uncertainty at an elevated level, and which we need to bring down. I come back to take the infrastructural issue. What is our vision? The vision has been set. We want to turn South Africa into one big construction site. We need to see visible evidence of that where it will promote growth and jobs, so that those are the kind of domestic issues which we need to follow, implement, and urgently make sure they happen. Because at the moment, when you look at our growth performance, our economy, despite being in an incipient upturn, is battling to retain its momentum. And that's the important challenge that we now face. And we must do those things that are under our control that will make a difference, so that we are in a better position and hopefully can improve on the 1% that we are currently expecting for our economic growth in this year.
As a parting shot, Professor Parsons, is there still confidence, though, in a government of national unity, given that once in a while there is a spanner in the works and we see that there is discontent within that particular formation of government as we know it post the elections? What's to be said about confidence levels and sentiment with regards to South Africans believing that implementation, like you've rightly put it, needs to have happened almost yesterday?
Well, I think the perspective here in our political economy, as I might call it, because that is what the GNU is all about, the political economy of South Africa. And we know that a year ago, it was a very positive development that we formed the government of national unity, which the markets, business and investors applauded, and they were certainly much happier with that situation. I think last week, among the tensions that have occurred in the GNU, despite the controversy around the dismissal of one of the deputy ministers, the markets hardly reacted. Not because they don't think that these issues are not important. They want the GNU to succeed. They know there are tensions and they know that they need to be managed. But what business wants, which is not party political, it says we want political stability, we want policy certainty under which we can take crucial investment decisions about the future, whether it's in mining or manufacturing or other parts of the economy, so that we can underpin the growth we need. The fact remains that if our growth momentum is not where it ought to be at the moment, this owes much more to the fact that investment, fixed investment, is at a low ebb. And we need to do what we have to do from a policy point of view and from a political stability point of view to ensure ultimately that what the government of national unity itself wants, namely to aim at a 3% GDP growth rate within the medium term, well, we need to do a lot more. As I say, I think it says in our narrative, we need to give our growth agenda an impetus, a jolt, an acceleration that will make us do much better than the 1% growth that many forecasters, including the Reserve Bank and the Treasury, are expecting during the course of this year.
Thank you so much for your input, Professor Raymond Parsons from the Northwest University Business School, talking us through their latest policy uncertainty index.